In today's video, we will look at how the Bay Area real estate market might look like by the end of this year, as well as the latest market report for July. Let's start with a summary of what's going on in the 9 Bay Area counties. When it comes to the number of transactions, in June of 2022, we had a total of over 6,300 sold properties in the 9 Bay Area counties. This past June, that number is only around 4,900. That's roughly a 22% decline in sales volume. When it comes to the number of days in the market, it stayed the same at 12 days. And finally, the median home price. June 2022, the median home price was at 1.2 million. June 2023, that number is down slightly, a little over 3%, 1,160,000. So that's our year-to-year comparison. Now, month to month, in May of this year, we had a total of 5,169 total transactions happening. Again, comparing that to this past June of around 4,900, we see that that decline is not as bad compared year to year. A little over 5% compared to 22%. Days on the market remains consistent, median of 12 days. And finally, month-to-month median price. May, the median was 1,125,000. June, the median again was 1,160,000, an increase of over 3%. So that's what happened this past month. Now, the question that I'm starting to get a lot again is how will the Bay Area real estate market look like at the end of the year? You know, when it comes to real estate, people like to time it. I often get the question, is now the right time to buy real estate? This video is not about that, but let me briefly answer this with a cliche that you've probably heard of. And that is, you don't wait to buy real estate, you buy real estate and wait. And that is really true. If you follow the channel, I've been reporting on what's been happening on the Bay Area real estate market. And like I said, when we compare the first half of 2022 to the first half of 2023, the overarching theme is that transactions all across all 9 Bay Area counties are down. Median home prices are also down, and days on the market has started to climb back up. During that time, the first half of 2022, I describe it as kind of panic buying as home buyers rushed in to buy homes before mortgage rates continued their climb. And the result was record number of sales and record number of price appreciation. We call this the unicorn years. I have a video about that here, why comparing those years and what's happening now, what happened in 2020, 2021, 2022, is not a good comparison. Check it out. Now that the year-to-year comparison, when we look at it, is totally different when what's going on month to month. Things are starting to change. For the most part, it's either very, the declines have been slight or lower, or what we've been seeing lately more and more is that it's actually starting to increase in number. And that's talking about price, okay? Now, this is not a Bay Area phenomenon. This is what's happening in the national real estate market as well. Let me show you what's happening nationally because, again, it's practically the same for us. Supply of homes are improving partly because homes are staying longer on the market and also a little bit of a bump in inventory. However, I want to state categorically that this does not mean it's a buyer's market or becoming a buyer's market. Even though there's a bump, it's not enough to change the tide. Affordability continues to be a big issue, and it doesn't look like it will change anytime soon. There has been no let-up of mortgage rates. Maybe the good news is that at least the Feds paused their rate increases the last time, but it's looking like they will increase again in the coming months. The number of homes for sale increased year over year. That is nationally. Here in the Bay Area, that's not the case. We still have a big inventory crunch. So what do we expect by the end of the year for the Bay Area? Just like in the previous months, we should start to see or continue to see prices starting to tick back up again, and we could end the year flat or slightly up. This is in line with the overall real estate market, as you can see with this graph. There will be pockets of weakness in the Bay Area, and it mostly will be around the new market, the new homebuyer market. But when we look at the overall market, I think we see a market that is or has turned around. Next up is this. Stay with me here, okay? It will continue to be a buyer's market. Now, you're probably saying, didn't I just say it's not going to be a buyer's market? Yes, I did say that. It will be a buyer's market, but not in the traditional sense for us here in the Bay Area. You see, the Bay Area real estate market has always been characterized by bidding wars, and that is still the case right now. The big difference is that the competition is not that fierce. Instead of competing with over 15 offers, you may be competing with just 5. And also the competition is not that aggressive, meaning buyers might not be so quick to just, go crazy throwing money around. Instead, they are a little bit more cautious. So to that end, it's kind of like a buyer's market, the Bay Area type of buyer's market. Nationally, it does look better for home buyers. More of the traditional buyer's market, where there's a little bit of more supply and buyers have actual bargaining power. Next up is mortgage rates. I don't like telling you what or where mortgage rates are headed, because if you asked me last year or 2 years ago that mortgage rates would be this high, I would have told you were high. You don't know what you're talking about. And basically, that's what I said last time. I didn't believe that rates will be where we are right now. So instead of giving you my prediction, let me share with you what the experts are saying, and then let me tell you what or how it will affect the Bay Area housing market and, the housing market in general. To summarize those predictions, the coming months, rates will stay around the same range, and there are expectations that we end the year slightly lower. However, things can change rapidly. There is still growing concern that the Feds might continue their rate hikes again and essentially push mortgage rates higher than they are now. Here's the thing with mortgage rates. If mortgage rates were to drop, it could have several significant effects on the real estate market. The most obvious one is increased affordability. Lower mortgage rates could result in reduced borrowing costs for home buyers. This increased affordability could stimulate demand and attract more potential buyers to the market. With lower monthly mortgage payments, buyers may be able to afford higher priced properties or have more options within their budget. This surge in demand could lead to increased competition among buyers. And I see this right now with buyers, my buyers that want to move up. They're waiting for rates to go down. I've said this several times on this channel. There is no shortage of demand or home buyers. The biggest issue is affordability and supply. So if mortgage rates drop, we take care of the affordability side of the equation, which leads us to the second effect. This is higher demand and increased sales. It's a no-brainer. Lower mortgage rates tend to incentivize home buying as they make home ownership more accessible. We saw this the last couple of years. This increased demand will lead to potentially more home sales. More buyers entering the market could also lead to shortening listing times and a decreased inventory of available homes. This might cause another frenzy as buyers take advantage of the lower rates. The third obvious effect of mortgage rate reduction, price appreciation. The combination of increased demand and reduced borrowing costs will lead to price appreciation in the real estate market. We are still seeing this right now at a milder level. With more buyers competing for a limited supply of homes, sellers will have the advantage and be able to command higher prices, less contingencies, etc. The fourth and fifth effect, I'm not going to go in detail, fairly self-explanatory. Number 4 would be an increase in refi activity. Number 5, this will stimulate the economy. So looking at these factors, mortgage rates, demand, and inventory, the Bay Area real estate market is actually looking like the market of 2018 and 2019, pre-COVID years, which means a more normal market, which also means that if you're looking for further price reductions or, a crash in home prices, that's highly unlikely. Hey, thanks for watching. If you're thinking of buying or selling, give us a call, a text, or an email. Days, nights, or weekends, we would love to help you out.